Have you ever noticed how, when the news is full of doom and gloom about the economy, some people just seem unfazed? While most of us are tightening our belts, worried about jobs and savings, the top 1% often see a completely different picture. It's not that they're immune to recessions, but they've learned to play a different game. Today, we're pulling back the curtain to reveal why the wealthy don't just survive economic downturns, they often thrive in them. Stick around because the strategies we'll cover could fundamentally change how you view your own financial future. So what's the big secret? It all starts with mindset. For the average person, the word recession triggers fear and panic. It means scarcity, loss, and uncertainty. But for seasoned investors and the ultra-wealthy, a recession spells opportunity. They understand that economic cycles are a natural part of the system, just like seasons. There's a winter, but spring always follows. Instead of panicking when the winter comes, they've already prepared for it. They see it as the best time to plant the seeds for future growth. While everyone else is selling in a panic, they're getting ready to buy. This leads to their second major advantage: preparation. The wealthy don't start thinking about a recession when it's already here. They prepare for it during the good times, the economic booms. What does this preparation look like? First, they manage their debt very carefully. While others might be taking on huge loans for depreciating assets, the wealthy focus on reducing their liabilities. They know that debt becomes a heavy anchor during a downturn. Second, they build up significant cash reserves. Having cash on hand when asset prices are falling is like having a superpower. It gives them the liquidity to act decisively when incredible bargains appear. This isn't just about saving money. It's about stockpiling ammunition for the opportunity that is to come. They've studied history and know that every crisis eventually ends. And those with cash are the ones who can scoop up stocks, real estate, and businesses at massive discounts. Now let's talk about what they do during the recession itself. The number one rule they follow is to remove emotion from the equation. When markets are crashing, our natural instinct is to run for the hills. Fear takes over. But the wealthy operate on systems, not feelings. They have a predefined strategy. They know which assets they want to buy, at what price points, and they stick to their plan. They've done their homework for years, identifying high-quality companies and properties that are temporarily undervalued due to market panic. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." This isn't just a clever quote. It's the core of their entire investment philosophy. They are actively buying when the headlines are at their worst, because they know that's when the best deals are found. Another key element is diversification, but not in the way most people think about it. It's not just about owning different stocks. It's about having multiple, uncorrelated streams of income. They might have income from a business, from rental properties, from stock dividends, and from bonds. So if one income stream takes a hit during a recession, say their business slows down, the others can still provide a steady flow of cash. This financial cushion is what allows them to stay calm and patient. They aren't forced to sell their investments at a loss to pay their bills, which is a trap many people fall into. This ability to hold on and wait is a massive, almost unfair advantage. They can simply wait for the market to recover, which it historically always has. This brings us to the power of a long-term perspective. The wealthy aren't trying to get rich quick. They're playing the long game, thinking in terms of decades, not days or months. They understand the magic of compounding, where your money starts making money, and then that money starts making even more money. A recession is just a blip on a 30 or 40-year chart. They see it as a temporary dip, a chance to add more to their portfolio at a lower cost, which will accelerate their wealth creation on the other side. They're not concerned with timing the market perfectly. They're focused on time asterisk and asterisk the market. By consistently investing, especially during downturns, they ensure that when the recovery happens, their portfolio experiences explosive growth. Ultimately, a recession acts as a massive wealth transfer. It transfers wealth from those who are unprepared, emotional, and reactive to those who are prepared, systematic, and strategic. It's a harsh reality, but it's how the financial world works. Those who panic and sell their assets at the bottom are essentially selling their future wealth at a discount to those who have the cash and courage to buy. The wealthy aren't causing the recession, but they are positioning themselves to benefit from the behavior of the masses. They've built a financial fortress that can withstand the storm, and from within that fortress, they can calmly pick and choose the best opportunities that the chaos presents. So, how can you apply these principles?
You don't need to be a billionaire to start thinking like one.
First, start educating yourself. Understand that markets move in cycles. Second, during good times, focus on reducing your personal debt and building an emergency fund. This cash reserve will be your lifeline and your opportunity fund. Third, create a simple, long-term investment plan and stick to it. Automate your investments so you're consistently buying, whether the market is up or down. This is called dollar cost averaging, and it forces you to buy more when prices are low. And finally, work on controlling your emotions. Unplug from the 24/7 news cycle of fear and focus on your long-term goals. The goal isn't to never worry, but to worry less because you are prepared. By adopting this mindset and these strategies, you can begin to turn economic uncertainty from a source of fear into a source of opportunity. You can start playing the same game just on your own scale. The difference between fearing a recession and welcoming it is simply preparation and knowledge. It's about building a system that works for you so you can stay calm and rational when everyone else is not. This is the real secret of the top 1%. Thanks for watching. If you found this valuable, please give this video a like and subscribe for more insights into building long-term wealth. Let me know in the comments what your biggest takeaway was. See you next time.